Hello and welcome everyone. Today we have something very special for you all. We are going to be talking about Kujira. Kujira is, they started as an app on Terra, but they have since migrated and created their own chain on Cosmos. So they are a Cosmos Layer 1 platform for community selected projects creating true value. This is very exciting. They have been building, they have just recently launched, and we are bringing this for you early, early, so that you can get the best content. All right, let's get started. So what's Kujira Protocol? Kujira is, as we said, a layer one ecosystem. They are semi-permissioned on-chain scheduler, native token generation. They are built on Cosmos SDK with Cosmos WASM, thriving community, and built to last. But you want to know what you can do and why it's important. So let's get straight to it. They have, as of right now, four dedicated apps or dedicated sections to them. So Orca, which is liquidate multiple assets across all of Cosmos at the click of a button. No bots, no code, no problems. We have already covered Kujira in the past. So specifically Orca and how you can liquidate people to get access to prime assets. Next, you got Fin, their new DEX. Now, this isn't just any DEX. It's not like Uniswap. This is going to be a lot more like trading on a centralized exchange, but you're going to be using DeFi. Beluga is an app that you can add multiple recipients in a single transaction. So you can send out, for example, payroll to everyone all at once using Beluga. And finally, Blue. Blue is your dashboard. You can do everything that you need to do regarding on-chain. So let's look at Blue. Blue is the landing page. We got the dashboard. We can see the token price, market cap, circulating supply, how much QG is staked. We got up here the wallet. We got kind of how much I have staked. So you can dox me already. You can see all of this information. But what's unique about Kujira and their tokenomics? That's what I want to get into, because as we saw over here, it is about grown up DeFi. What does that even mean? So Kujira's tokenomics are very unique because there are no inflationary tokens for staking. What does that even mean? Well, with staking, most layer one blockchains have inflationary tokens. That is, they mint tokens in order to reward stakers. But Kujira does not do this. How do they manage? Well, from fees on the platform, not only on their exchange, but on Orca and on every app, every transaction. All those fees go directly to stakers. Not only that, but fees can actually be any asset. And they also get a commission on the different assets that are being liquidated. So staking rewards are not only in Kujira token, but in any token that is used on the platform. So if we jump over to the stake section, you can see what I've staked and you can see my pending rewards. I have USDC as a staking reward and Kuji as a staking reward. So you can actually see the two different rewards from the current two active tokens that are on mainnet. And we can actually see all of the validators here as well. We can pick and choose all the different validators we want. You can actually, this is distributed in terms of activity, active validators, and whether or not they've missed a block or not. So it's only been 1 day so far. So it's worth looking at your validators and make sure to stake with smaller validators in order to have a fairer distribution. So remember, if you stake, you get all fees from the protocol. This is really unique. So how can you get involved? Let's get right to it. There is a cross-chain bridge powered by Axelar. I won't dive way into what Axler is, but they are secure cross-chain communications for Web3. They're a form of a bridge. They can be compared to something like Layer Zero, um, uh, even other types of bridges, but essentially they're connecting different layer ones so that you can bridge assets. So if we go over to the bridge here, we can see we can bridge from Ethereum. However, it costs us 20 USDC to bridge from Ethereum at the moment. However, we could bridge from Avalanche and it is only 150 to bridge. So that's actually pretty cheap and pretty great. At the moment, we can only bridge USDC. However, they are looking to expand more assets that you will be able to trade. So as they expand assets, they will, as you can see, there's already different assets we could bridge, but they are not ready to be traded. So there's no reason to bridge any of these other assets yet. Um, for now, there is only USDC on the network. So if you want to bridge, you can bridge USDC directly into Kujira. Now, here is the fun part. We can actually activate a new um, gas token if we so choose, because say you bridged USDC and you don't have any QG yet. So you go over here on the top right. As you can see in the top right, we click on that wallet and we get a drop down menu. And in that drop down menu, we can actually select which one we want to use as our gas token. So use for gas payment, we can see you can use QG or AXL USDC. So you can see that that is wonderful. We can see the drop down, we can see gas payment. So we select, and here's the little trick because you do have to kind of work through it, but you select whichever gas token you want. So I'm going to select USDC here. Then I'm going to disconnect my wallet. Now I'm going to go directly to my Kepler wallet. You won't be able to see this because it's an external dropdown, but I'm currently opening my Kepler wallet. I am looking at the list of all the networks. I am deleting the Kujira network. I'm deleting that network. It's asking me if I want to remove it. I say yes. And when I remove it, I come back and I press connect wallet. I will get a pop-up on my wallet that is asking me to approve adding the network. I will approve twice. I have to approve adding the Kujira network, approve, and then we'll connect. And as I have connected, I can see that USDC is now my native gas token. That quick, that easy. So if you guys have any questions, drop them in the comments. Happy to answer those questions. You can also join the Discord for the bird nest. Those questions can be answered there as well. Nice, quick, easy. You can change and use any active token on the network. So if Ethereum is added, if Bitcoin is added, anything you want to use as a gas token, you can use on the network. I personally like to use USDC as a gas token because if the other tokens go up, you're never using them, you're never losing them. You are using as a gas token the one that is getting affected by inflation, USDC. So to me, that's fun using that as a gas token for now. Next, let's look at Fin. Fin is their amazing trading platform. So first, let's look at what Fin is. Fin by Kujira is Cosmos's first decentralized, permissionless, 100% on-chain order book style token exchange. Sellers, arbitrage bots, and market makers provide the liquidity for the market, not partisan farmers. So what does this mean? Unlike Uniswap, where people offer liquidity and essentially farm the token in order to earn rewards, here sellers, arbitrage bots, and market makers are providing liquidity. With Fin, there is no need for inflationary token incentives. This makes it more capital efficient, and farmers can deploy their capital elsewhere. Think KuCoin, but 100% decentralized and on-chain. This is really unique. There's no reliance on bots to execute trades and no need for additional fees to incentivize them. In short, it's much cheaper. There's no risk of a trade being missed, and it leaves no opportunity for bias in which trade bots choose to execute. So this makes it a lot better as an exchange because, as we mentioned, you won't get front run by bots and it's cheaper. So what is in it for the protocols? Well, a whole lot. Actually, you now have no need at all for liquidity pool, which brings about three huge benefits. You don't need to give away millions of printed slash inflationary tokens just to keep people in an LP. And your community faces no risk of impermanent loss just for trying to support your project. You can reallocate your protocol owned liquidity to something more productive. And last but not least, forget about the first in our first model. All orders on Fin are executed instantly and fairly. So this is really, really unique and part of the reason why I'm so excited about what Kujira is building. As we can see here, the only assets at the moment are Kuji and Axelar USDC. However, assets are constantly being added, and that is this actually launched yesterday. Trading launched yesterday, and assets will be added shortly. If you want, check my Twitter. I'll probably be updated on when new assets go live on Kujira, but this is going to be huge. We can see it's nice in terms of you can have a chart, you can see the order book, you can see the recent trades right here. And if we go down, open orders, filled orders, nice and neat. You can place a spot order and choose how much price. And if you're placing a limit order, or you can just place simple market order, you can both buy and sell. So nice and straightforward. And coming soon, margin. Now, margin is going to work very uniquely on Kujira, and this is going to be very excited once that comes out. Next, let's look at fees, because fees are something that are often overlooked, especially compared to exchanges. So maker fees are 0.075, and taker fees are 0.15. Remember, 100% of all fees generated on Fin are paid to Kuji stakers. As we saw in the beginning, staking rewards and fees go straight to stakers. There's no inflationary tokens. Fees go right back to the people supporting the protocol, the people staking. So placing, canceling, and withdrawing trades all require contract signing, which means network fees. These are generally a few cents. So last I did any transaction on Kujira, it was like 0.00001 cent or something. Like, fees are extremely cheap for now. Let's see if the network can get overloaded and how high fees can go compared to Ethereum. But for now, fees are very cheap, especially since you can also choose what token you want to use as a fee. If we compare trading fees to something like Binance over here, Binance has a 0.1 maker and 0.1 taker. So the taker fee is pretty close, but the maker fee is actually way cheaper on Kuji. If we compare it to Coinbase, though, Coinbase has some crazy fees. Like, taker fee is 0.6 and maker fee is 0.4. So just simply Coinbase, it's already 6 times smaller in terms of fees. Like, fees are way cheaper on Kujira, which is another reason why you might want to choose. Now, if you were to trade on Fin, there are no restrictions in terms of what countries can participate. All you will need is a Kepler wallet. If you guys want a video on Kepler wallets, I'm happy to do that. But here is the alpha, and here is the good stuff. Kujira is coming out with their own wallet. We believe that decentralized commerce is the next stage of the growth of our industry, the one that will bring true, real value into the ecosystem, and with it, bring the next billion users. This starts with a very powerful wallet. When? Soon. So, the wallet, swap, pay, stake, and sites. Kujira wallet will be very unique, and we will be doing an in-depth video about it once it comes out, since I believe it's gonna take over Cosmos and IBC with some of the interesting implementations that they are preparing. So for now, if you want to participate, you do need a Kepler wallet. And of course, I can make a video or drop comments. We can get you Kepler wallet introduction about all of that. Finally, let's look at Orca. Orca is their liquidation platform, and for now, they only have coming soon for a couple different Polkadot tokens. However, they are in talks with most of the Cosmos ecosystem, and most of the money markets that require liquidation. So once those goes live, there's going to be cross-chain liquidations starting in Cosmos and where you can go. So this is going to be huge. And again, what can you do? Well, if someone is over leveraged and hasn't paid off their loan, you can come in and pay off their loan, get a huge discount on those assets, on that collateral that they used as loan, and buy it cheaper than a market buy. That is why you would want to participate in liquidations. Why would a protocol want you to participate in liquidations? Well, it helps mitigate cascading liquidations and it helps mitigate problems with over leveraged people, especially on money markets. So, being able to participate in these liquidations is going to help you and the protocols as well manage risk and manage any type of potential cascading liquidation. So, there's so much happening on Kujira, and this was just an intro on how you can get started, get in early. Not only that, but participate in something that is working on low fee and non-inflationary tokenomics. This is pretty interesting. So let's look at finally Kujira. You can follow them on Twitter. They have a guide on Twitter on how to trade on Fin. This is a guide that was based off of their testnet. They had a testnet launch of their DEX and how everything worked on testnet. Now that they are live on mainnet, we will be looking out for what assets they add so that you can trade and use them. But for now, again, wrapping it all up, we're going to go back to the beginning. Grown up DeFi. What's grown up DeFi? Better staking rewards, no inflationary tokens. Any asset can be used as a gas payment. Staking rewards all are in different assets because, well, if you stake to secure the chain, you will be earning fees from all of the different protocols. And you can migrate using the cross-chain bridge powered by Axelar from currently Ethereum, Avalanche, Polygon, Phantom, and Moonbeam. At the moment, you can only migrate USDC because that is the only, well, you can migrate any token on this list. However, the only active token for trading on Fin is USDC, so there's no reason to migrate anything other than USDC at the moment. As you can see, the current tokens are Kuji and Axelar USDC, but more tokens will be listed. Now remember, as tokens are listed, more goes back to the stakers, and that's what's so interesting. If Bitcoin is listed, then people can not only pay fees in Bitcoin, pay gas fees in Bitcoin, but trading fees in Bitcoin will go back to anyone staking. So if you could be earning Bitcoin or you could be earning Ethereum passively just by people trading on the platform. Now, if you're a protocol, you could actually be list your token on the Fin exchange, and you're essentially airdropping these tokens to anyone that is staking their Kuji on the chain, because as your token gets traded, this token is shared among the validators and among staking as staking rewards. So you're essentially airdropping your token to everyone as it gets used. And that's very unique for any protocols because they don't need to incentivize differently for liquidity. And then, of course, we talked about their fees, how it's cheaper than Coinbase, it's matching Binance fees, and liquidations are coming. Liquidations across chain. So that was Kujira Protocol. It's very exciting to see what they've been building. It took them exactly a month and almost 15 days to launch a completely new chain after Terra collapsed. And you have to give them props to that. This team has been actively building and delivering so quickly. There is teams and there is protocols that haven't even migrated to Terra V2 if that was their decision. These guys said, nope, we are doing our own thing, and they have already launched a mainnet with working products. So look out for the builders. that's what you want to look out for in the bear market, because those are the ones that are going to come out ahead when we get the bulls back. So again, if you guys have any questions, drop them in the comments, join the Discord. You can get a trial at the Bird Nest. Thank you for watching. Peace.